NEO provides more details about their 3.0 version. Dan Larimer admits EOS needs more onboarding tools and says Block 1 will build them. Augur launches its predictions market. The People's Bank of China declares their cryptocurrency ban a tremendous success. Bancor goes offline after a $23 million hack. Binance announces the completion of Icon and Tron token swaps. Ontology's Onto app is now live. The Bitcoin ETF application is now open for comments on the SEC website. The Philippines approves 2 new cryptocurrency exchanges. Stellar announces more plans to streamline payments processing in Africa. And we talk about mainnets and whether they actually help or hurt the price of a cryptocurrency. We've got all your headlines mixed with some daily market analysis. I'm Elio Trades, and your FUD TV Daily Update starts now. Welcome back, FUD Nation. Now, of course, we're looking at a very bloody day in the market. Oh no! It was looking pretty unstable, and of course, if you're looking at these weekly charts, you just see a huge, this looks like a water slide here, or maybe the side of a mountain. It's horrible. Anyway, we see a huge drop off, kind of erasing all of the gains, or not all of the gains, but a lot of the gains that we had throughout the week. Obviously, I made comments multiple times saying that these gains didn't seem like they were that organic. They seemed like they were just single big candles out of nowhere. It wasn't continual volume, so wasn't a great indicator of continual growth in the market. As I've said many times, I've seen 5,200 or the 5K mark as something that wouldn't be unlikely. But obviously, we're going to be talking, and I just did a video which I'll edit and get up hopefully later today or early tomorrow. And it's about really what is actually going to help this market recover, and not these symbolic or sort of semi-meaningful milestones, but actual milestones that are going to impact the price of Bitcoin. And obviously, the price of Bitcoin is hugely influential over the entire market. When Bitcoin has a good day, all these coins have a good day. When Bitcoin has a bad day, all the coins have a bad day, or most of the coins have a bad day. So obviously, going with that logic, we're going to be talking a lot more about what the fundamentals around Bitcoin reveal as far as what we should be looking forward to. So look forward to that video coming out soon. Really not a lot to go over here, except things are bleeding heavily. Let's hop over to some news. Starting off with some good news here, we have word that Augur has launched their prediction markets. So obviously, if you've been following the Augur or the REP project, this is a cool project. It's about predictions markets, and you can kind of create predictions markets around anything. They got a huge endorsement from Pantera Capital, and they've just gone live with their Augur app. So check them out if you're interested in the Augur project. They're delivering their technology, always a good sign. The People's Bank of China declares their cryptocurrency ban a tremendous success. Good job, China. So happy for you, I could just cry. At one point, China was occupying over 90% of Bitcoin transactions in 2017, as recently as last year. So essentially, you can see, and it's probably not that surprising, why Bitcoin has dropped tremendously in value, as 90% of the market has just evaporated because of this Chinese regulation. What the? Obviously, we're still seeing Bitcoin at over 2x the price that it was back in exactly 1 year ago. So this isn't the end of the world. It's shown that there's a lot more new interest, retail interest outside of China, but it's also highlighting the real issue here, which is that we've lost a significant part of the market. And until China truly comes back and we start to see China really participate in the Bitcoin market again, we're going to be playing at a bit of a deficit, and we need to build up other markets, strengthen other markets before we can really expect these huge moonshots. We're going to be releasing an entire video either later today or tomorrow about what we really should be looking forward to as far as Bitcoin prices. But for now, this is a huge factor, is understanding that we've been reduced from 90% Chinese participation to 1%. That is a devastating loss. Also, we got a bit more details around NEO's 3.0 version. Obviously, we had guessed that it had something to do with scalability, but they've gone ahead and filled in some of those blanks. To read directly from Eric Zhang, NEO 3.0 will be an entirely new version of the NEO platform built for large-scale enterprise use cases. It will provide higher TPS and stability, expanded APIs for smart contracts, optimized economic and pricing models. Importantly, we will entirely redesign NEO's core modules. So they focus here on increasing TPS. They talk about refactoring, optimizing, implementing a feature manifest and permission systems. They're preparing for dynamic sharding. It's not clear whether they're going to be sharding within the NEO platform on the NEO blockchain, or whether they're going to look for sharding solutions like some of their accelerators. We know there's a few blockchain projects that are focusing on accelerating TPS and that work in close collaboration with NEO. So we don't know whether they're going to do that or whether they're going to look to just make it more easy for those other projects to help out. They have some bug fixes. They're adjusting the economic model in their protocol. Obviously, NEO has been indivisible, so they've been working on that. They considered it a problem. And gas was also indivisible. I like how they said NEO was indivisible and gas could not be divided when paying for system fees. Anyway, they're adjusting their system pricing model, and they want to make it more affordable for dApps to run on the platform. They're making their smart contracts cross-platform so that it's much more interoperable. This has been big buzzwords: sharding, scaling, interoperability. These are just kind of the challenges of blockchain right now. They also have their feature manifest and permission system they're working on. They're also adding something called native contracts. So essentially, they're not run in a virtual machine. They're run directly on the blockchain. So this is pretty cool, and it's a new way to interact more directly with the blockchain. They're also adding callback APIs, which allow for you to sort of call back other parts of code and execute them. They're working on the NEO VM, the virtual machine, making it fully decoupled. And they're having more global variables. If you're an engineer, you'll understand what that is. It's adding in the concept of global variables, which they weren't supporting before. And in conclusion, NEO will be reborn. You know, it's super poetic, beautiful, amazing. We can't wait.
Nice.
So if you've been following this whole EOS rollout, you know that it has not exactly been a smooth slip and slide. It's been a bumpy road. And obviously there's a cost associated with registering a new EOS account, 2 EOS to be precise. And honestly, it's not really something that's caught on. There's only 300,000 accounts. There's 10 million Bitcoin accounts. And so, you know, a question was posed to Dan Larimer, hey, are we going to actually provide some onboarding solutions? Is Block One going to provide some onboarding solutions? And the response to that is we will provide onboard solutions. So it seems like Block One is going to kick into gear here and provide a little bit more technology, roll out a little bit more software. Everybody says, what is Block One doing with all that money? In theory, it should only take X amount of money to release a software, but in reality, it could take, especially with new cutting edge sort of revolutionary software like Block One is creating, it could actually take many orders of magnitude more than that. And we're seeing now the need for other solutions that weren't originally anticipated. So we can see here Block One is going to produce a little bit more. They're going to deliver a little bit more software. They're under promising. They're not promising much here, but hopefully this will help solve some of the issues here with getting the EOS mainnet up fully functional and getting more users engaged with it. Now, there's been a significant hack of the Bancor network, one of the more popular cryptocurrency exchanges, and it was to the tune of $23 million, around that number, but fortunately, I guess in some senses, fortunately, Bancor has the ability to freeze accounts, and they did so with all of the Bancor tokens. So while there was a significant amount of Ethereum that was hacked, and there was another token that was also hacked, the Bancor tokens were actually frozen. Those were actually, in the end, not successfully stolen from the network. Regardless, the total amount of money that was stolen was around the range of $12 million, and Bancor is currently offline, maintaining or fixing their network, trying to recover from this. Definitely not a good piece of news. Could be kind of a contributor to the downturn in the market, but I don't really believe that. To be honest, it looked like we were barely holding on to the 6,800 price mark. So I was expecting a little bit more dumping, and that's exactly what we got. This certainly didn't help, but we'll keep you updated as more details around this Bancor hack come out. If you were involved in swapping your Icon or Tron tokens on Binance, we've just been told that that swap is complete. It's been successful. So you can now withdraw and deposit the mainnet TRX and Icon tokens. Now, if you go to onto.app, you can see that Ontology just released their Onto app, which is a mobile-friendly app here that allows you to take control of your identity. They also provide a mechanism for doing the Ontology token swaps. It's a very cool first step in bringing the Ontology mainnet into real-world use case examples, and it's definitely an exciting step forward. This is probably going to be a hub of where you sort of access all of the utility for the Ontology mainnet. Very exciting stuff, so check it out at onto.app. Now, in potentially one of the most pivotal moments for our community, we are under review now. After the SEC has said that Bitcoin is clearly not a security, we now have a new application from the CBOE trying to get a Bitcoin ETF approved, and you can actually submit your comments just right here on this forum. I'll link it in the video description below. Go there, submit some comments, tell the SEC why you think a Bitcoin ETF is a good thing and would be a positive thing for the economy in general. This is a pivotal moment. This could be one of those concrete milestones that help our whole community grow and start to recover from this bear market. The Philippines just approved 2 new cryptocurrency exchanges, so that's just good news. The adoption of cryptocurrency seems to be penetrating globally, even if it's not penetrating in the United States quite as fast as we had wanted. The reality is this is a global movement, and we can't lose sight of that. To that effect, we also got word that Stellar is now working with Flutterwave in Africa to help streamline mobile payments in Africa. We know that Stellar is working at bringing cryptocurrency or banking services to all of the developing world. This isn't a huge piece of adoption, but it's a good piece of news, and we need some good news right now. And now we're going to investigate 3 big mainnet launches, and we're going to talk about why the price seems to have tanked in response to the mainnet launch instead of sort of taking on more value, which is what you'd really expect when a tech firm is delivering upon their promises, showing that they are who they say they are, and they're going to make what they say they're going to make. And really, it's not. And unfortunately, the picture isn't as pretty as we'd like it to be. So in order to just reestablish this, obviously the EOS price was at one point over $22 in the lead up to its mainnet release. And right around its mainnet release, it was actually about, $14, $15. And now it's trading at well under $10. So why did it sink? Obviously, there was a lot of bad news. There were some hiccups in the rollout. People still aren't fully satisfied with the way EOS is working. And sure, maybe that sentiment, maybe that bad news has really driven the market down. Now we can also take VeChain, which was trading for $260. In the months prior, within June, it was trading for almost $3, and now it's trading for about $225. It's definitely sunk in price after the mainnet launch. And then we look to Ontology, which was trading for about $550 and now is trading for $375. A huge dip from Ontology over the last few weeks, and that's really after it's been delivering some awesome tech. It's got its mainnet release, it's got its wallet that it's out, its mobile client, it's starting to really give you the utility of that mainnet network. So what's the deal here? Either the true value of the project has been mismeasured, totally possible as this is a completely speculative world, or given that these are 3 very sought after projects that all saw the same sort of dip, maybe the projects are being manipulated upward in price by sort of the internal team, and then just to be sold at high prices by people FOMOing in, sort of retail buyers that really want to get in on this sort of hype cycle. And then once the mainnet release comes out, the sort of internal team sells off just for profit so that the internal team has more money. This is a more negative view of what could be happening here, but it could be also pretty accurate. The big problem is that it's almost impossible to establish a secure base token value in this very speculative market. That's not to say that these projects are overvalued or undervalued, though there's a big case for them being quite overvalued. In the end, it's very difficult to actually price these tokens out because most of them don't have any revenue at all. They don't make money. So usually in the traditional sort of securities world, what a token or what a stock is worth is usually some kind of derivative number based on the amount of revenue or expected revenue that the company is making. In this case, this is purely speculation on tech revolution. So there's a lot of variables here that are just sort of being rounded. Finally, there's the question of what even is a mainnet, so much as a beginning of a journey rather than the end of a journey. The mainnet is really where you just start building and you start delivering on what you say you're going to deliver, just getting from vapor to just the beginning of actually having any tech at all. So to say that this is the end of the journey and now we're successful as a project because we have a mainnet is far from accurate. This is just to say, hey, we're just really beginning this journey. What do you guys think? What do you think of the whole mainnet contributing to a huge drop in price? What do you guys think the real reason is behind that? I'm curious. Let me know in the comments below. I hope this episode wasn't too depressing for you guys. I hope you enjoyed it. We got a lot more coming out, more content on concrete objectives that we think once we hit those objectives will actually contribute to sustainable growth in the market. So don't get down. We just want to refocus the conversation on things that matter and stop placing as much importance on sort of not really so meaningful milestones like, for example, mainnet releases. I'm curious what you guys think about it. Of course, let's start the conversation below. If you enjoyed this video and you're not subscribed to this channel, I encourage you to hit that subscribe button and click that little bell notification, and you'll be made aware whenever we put out new content. I'm Elio Trades, you're watching FUD TV, and I'll see you very, very soon on the next episode.